Now that we've been through top-down analysis and we've been through refining zones, it's time to show you how we apply the methods we learned in the first section to the high timeframes to find swing or high timeframe setups. The first step to any successful trade is actually formulating an idea. Before you can find entries, targets, and stops, definitely, you have to find an overall idea for a trade. You need to know where the market is going to go and where you can potentially get in and get out to make a profit. So, how do we actually start out finding a trade? Well, the place that it all begins is going to be the weekly time frame. And as we spoke about earlier on in the top-down section, we don't need to scale too far back on the weekly. We can just focus on the current structure and see what's happening. Now, scaling back to the further dates can actually be useful to see what is going on in the market. Are we in an uptrend? Are we in a downtrend? And so on. But we end up scaling back so many years. And if we're only taking a trade for a week or a couple of weeks, we normally don't need to do that. So here we can see on the weekly time frame a large push down on USD CAD where we had lower low, lower high, lower low, lower high, lower low. Then we've actually had a higher high here, which has pushed through some of these previous ones, right? So we can see from this point onwards, we have had a bullish structural break. And then actually, if we look at the price action within that, we've obviously had higher high, higher low, higher high, higher low, higher high, higher low, lower high, and then a lower low. So now we could potentially be selling off and shifting back into the downtrend. And what we could do there is begin looking for some potential areas of reversal. So I can mark on this weekly supply area and figure, okay, the market has actually making some structural breaks to the upside, but after making these, it's then made another break to the downside. So the structure is telling me that potentially we're bearish long term, but we do have some imbalanced space here and we have showed a bit of strength. So we could definitely look for a trade through into this price area here. So notice how when we started off, we just first of all looked at the structure to work out what the structure was doing, which was obviously bearish, turning to bullish momentarily, but then kind of turning to bearish once again. Looking at the structure here gives us an idea of where we'd like to trade. I mean, potentially we'd like to trade bearish from this point. But what does that tell us? Well, with the imbalance concepts that we use as well, we can see that we do have an imbalance into this point. Another thing to note is that we've also come in and retested this demand zone, which is a large demand zone, obviously, on the weekly. But we are now in that demand zone and forming a little bit of a push to the upside. So I think from what I've just seen on the weekly, we could take a guess that the market is likely to fill this imbalance, trade into the supply, and then potentially will break higher because we broke the structure, or we'll sell off. It doesn't matter to us because this is a weekly range. We have a full weekly range of around 145 or 200 pips, from where we are now to where we could potentially take this before we start selling. And that is like a trade for a week or a couple of weeks that we could run through and make quite a lot of profit on if we can get a good entry going on this. So that is where we begin, and that is the formulating setup on the weekly. We just want to see what is the structure telling us, and then where is price reacting to supply and demand in line with that structure, and then is there any imbalanced space that we could trade through. So now we can scale down to, for example, the daily chart and have a look what price is telling us here. Well, we know this is a large weekly zone. We can actually see that it's quite messy as well. We do have, obviously, this one zone down here. We could indicate with this candle. That was retested, and we have another zone here. So we can mark these on. And what it's actually going to tell us is that price did wick through the first zone, but we have actually since pushed to the upside. And if we look at some of the structure here, we can see we have from this large push down, we've got lower low, lower high, lower low, lower high, lower low, lower high, lower low, but then we've broken through and formed this higher high. So the first break of structure here is this. We would obviously like to see this more so on the 4-hour time frame to make sure that it is valid. But for the meantime, we can actually see that the demand zone has been respected. We've broke structure and we've formed a higher low once again, and then we've started to move away and we've broken another structure point as well. So structure always comes first when we are looking for a setup. We obviously worked out the supply and demand before. We can then refine that as we spoke about in the previous video. And from there, we can start to look towards the structure and supply and demand of the current time frame. So this is kind of further validating my idea. I can see some imbalanced space here taking us into this large supply zone. I can also see that we've reacted to this demand zone. We did wick below, but we've since pushed up and formed higher high, higher low, higher high. So to me, this is quite a valid setup to therefore begin looking for some buys if we get the right confirmations given to us. So from this point, it is now time to go to the lower time frames and actually see if there is a setup waiting for us. Right, so dropping down here to the 4-hour time frame, we can obviously see the structure in a better light. We have lower low, lower high, lower low, higher high, higher low, higher high, higher low, and a higher high. So the area of interest for the first initial trade is going to be this zone here. There's obviously the same thing we spoke about before. This is the zone that broke structure, right? But we also have this area above as well, this doji. So what we can do is actually scale from here and refine and see either of these zones, which of these zones is going to be the best one to buy from. So if we have a look at the hourly, we can then refine this zone down a little bit. And we can see here that, okay, this is actually an imbalanced zone in the bottom. So my primary focus for this trade is going to be on that one. Now, if we did come into this area and then show bullish confirmation, potentially I'd be happy with that. But we would be looking at this one primarily for the entry. And that right there is the process of finding a setup. So let's do a quick recap. We started on the weekly time frame. We first of all saw that we had a initial bullish break of structure here, but then a bearish break of structure here. Traded into a demand zone, left open an imbalanced supply zone. That gave us an idea that potentially we could look for some buys through this range into this supply zone. Then we went to the daily time frame. We refined this zone here. We refined this zone here to make sure that we're working with well imbalanced ranges. We can see there we have an imbalance. This one is fully efficient and fully balanced. We then looked at the structure here on the daily perspective where we had lower low, lower high, lower low, higher high, higher low, higher high, and now we are looking to buy from the next higher low. Then we go down to the 4 hour to actually make sure the structure is all what it seems, and we go to the 1 hour to find the best possible zone to buy from, which in this instance is going to be this nice imbalanced zone here. So there we go. We have the setup formulated. In the next video, we're actually going to talk about formulating entries. There is no need to do that right now. I just want to do it step by step. This is how we formulate a trade on a day-to-day perspective. Obviously, this is high time frame work, okay? If we're looking at the low time frames, there's actually going to be multiple trades within this structure. But if you are looking to be a swing trader, perhaps you are working a job, or you just want a more relaxed approach than having to be active on the charts at 7 a.m. every morning, or wherever you are in the world, different timing, but a set schedule where you have to be on the charts. If you want that more refined approach to trading, then these are the strategies for you. And even if you are not that kind of trader and you do want to primarily specialize in the low time frame work, I think it's amazing to have a good understanding of the swings as well. Like I said in the first chapter, markets are fractal. What happens here on the high time frames is the same as what happens on the low time frames. So if you can build a view on some of the cleaner charts, which are the higher time frame charts, you're going to have a very good run when you go to the low time frames where price action is a little bit choppier because you're going to understand already what it is that the market does and the actions the market takes. Aside from that, even if you're low time frame trading, it is also wonderful to have some swings running in the background. I do find that very useful and very beneficial to actually have some of those rolling without having to, constantly low time frame trade, because some days you just don't feel like it. And if you want to have a lie-in or you go on holiday, it's difficult to keep up with that routine of the low time frame trading. If you have a really good understanding of high time frame trading, however, you can actually dive in and put on some swings in the background while you go and do whatever you're doing, whether you're holidaying or just taking a break from the chart for a little while. So there we go. That is how to formulate a setup. All is said and done there. In the next video, we are going to look at how to formulate entries, which is going to be very useful. Then we're going to look at stop losses and targets, because those are obviously very important as well. And from there, we will begin to show some examples and go a little bit more into the advanced stuff before moving on to the low time frame trading. So I hope you've enjoyed this video. I hope it's been beneficial, and I will see you in the next one.